We know this new central bank team and Minister Şimşek have really been on a mission to try and bring more orthodox policy back. Are they winning?
Look, I think they are winning in that this will take some time to implement. So both Minister Şimşek and Central Bank Governor Gaye Erkan are figures that are known and respected by the market. They're definitely making the right noises. And also, we all know that they really are shifting Turkey back into an orthodox fiscal and monetary policy. These things take time. They will not be achieved overnight. And I think as investors, when we look at the markets, we like nothing more than consistency over a period of time. Now, granted, the world that we are living in right now, especially where Turkey is positioned geostrategically, is not necessarily the easiest of jurisdictions. So I do anticipate that we will be getting much more of this geopolitical noise that we have to deal with, the government has to deal with. I do think that Şimşek and Gaye Erkan are well equipped to do this, but again, it's a very active news flow. And it will take some time until investors are fully convinced that these are not policies that are dependent on any such individuals, but it's actually a state policy going forward.
And so many external factors for them to be weighing as well. Look, we've already seen 5 consecutive rate increases, rates now at 35%, which is the highest since 2003. How much higher do rates need to go in Turkey in order to tame this double-digit inflation that we persistently see?
I think we have to see it go up higher yet still to be able to avoid the negative real rates scenarios. I do think that obviously Minister Şimşek and Gaye Erkan have a very difficult balancing act because they have to acknowledge the fact that the industry very much is intertwined with the cost of funding, the bank balance sheets, and what's actually going on in the world. Perhaps, I mean, to a certain extent, you know, we all live in a very interconnected world at a stage where the whole investor base is trying to reprice risk globally. So it will be tough. And to think otherwise, I think, would be doing disservice to the program that they have put in place. I do think the rates will have to go higher. I don't see it happening in a significant spikes per se, but more layered towards mid next year.
And also fascinating, I spoke with Minister Şimşek on stage at FII in Saudi Arabia in Riyadh just last week, and he weighed in on what all of this means for investor confidence moving forward and some of the measures that the new economic team is putting in place. I wanted to play that now. We'll get your reaction off the back of this, listening to what Minister Şimşek had to say.
Actions speak louder than words. We're rebuilding it by actually rebuilding credibility by delivery. We front-loaded fiscal adjustment in tune of 2.5% of GDP in July. That should help restore fiscal health. There is conventional monetary tightening in addition to selective credit tightening as well as quantitative tightening. So that should help anchor inflation expectations going forward. We've also unveiled a very comprehensive structural reform agenda.
Minister Şimşek speaking to me last week. And Ozan, what's your take on this? Because we were speaking before about the market implications of this tightening, and we've seen the biggest monthly drop in October since 2020 for Turkish stocks. I think President Erdogan's comments on Israel probably had an impact, but are we seeing higher rates actually influencing investment decisions in Turkey now?
Look, I think we're going to see higher rates influence investment decisions all across the world. I don't see this as an isolated issue to be discussed in a bubble per se. I do think that in the world that we're living in, and even emerging markets on the whole, investors will have to differentiate based on the industrial mix of countries. And by the way, geopolitics is playing more and more important role in understanding which countries are going to be at the forefront of longer-term investments. You know, we live in a world where I would say that the largest driver or the most significant driver of the geopolitical changes we will witness will be between US and China and will filter down from there. So we live in an age where we seem to have pressed the pause button on globalization, an age where friendshoring and nearshoring will matter more and more, especially around critical industries like the semiconductor manufacturing in the world. And to that extent, to comment on how investor flow will come to any country is difficult to judge just by the fiscal and monetary policies. Now, Turkey, I should say, is really well placed in terms of becoming a credible semi-hedge against over-interdependence in Chinese manufacturing for European countries on the whole. Investors will want to see the continuation of this orthodox monetary and fiscal policy. And to Minister Şimşek's comments, which I think were completely correct, the proof of the pudding is eating. So it will take time and it will take delivery, and really the FDI inflows will find their way back into Turkey once we know that this is here to stay. Also, by the way, as now you seem to come to, at least for now, the end of the rate hike cycle in the US, and I'm sure will be followed by Bank of England and possibly Europe later down the line, investors will have a greater capacity to understand how much yield pickup they need on EM assets, and Turkey is no exception. So I think watch the space.